Hey guys, welcome to the first portfolio update of 2023. So the good news is this right here. I was able to sell Revolve. Now I know you can't see the percentage, but I was able to sell Revolve for a 65 some odd percent profit. Like my cost basis of money invested was $656, and I made $428 from that. So I think that's a pretty good. I think that's a pretty good sell and a pretty good run with the stock. Now, it probably isn't as good as a year ago when I should have sold at like 500% gains. But hey, details. And I had such a good run with the stock that if this stock ever drops back down into the mid-teens or something like that, and with this recession that's apparently coming, it's a certain possibility. If it ever drops back down, I could see myself picking this stock back up. Now, that's the good news. The bad news is the rest of my portfolio is not looking so good. Now, we had a really good day today, exceptionally good day today, but I mean, given how the past couple of years have gone, like, I don't care. I'm completely desensitized to this. Give me a good month, a good solid month, and I will start to drink the Kool-Aid. Now, things aren't all bad to start off the year. I mean, we have Fedex inching its way back up, like way off of its 52-week low. I know you can't see all the way over here, but like 141 was this low, and yeah, it's climbing its way back up. Gevo has seen better days, obviously. So has Google. Intel is trying to claw its way back up very, very slowly. And Meta, its low was $88. So it is very slowly clawing its way back. Now, we'll see if that holds on the next earnings, because the last several earnings have disappointed. And the thing with Meta and Google, as you well know, like, these are dependent on ad revenue, and we are still not out of the ad revenue apocalypse yet. And plus we have the whole thing where, everyone's mad at Meta for the metaverse thing. So I'm not looking too hopeful as far as the next earnings. So I expect this to probably drop again. But hey, we'll see what happens. And for now, we're looking pretty good. Then we got Palantir being Palantir. Like, who knows how they're going to do over the next few quarters? Like, as long as, like, hopefully they start, the revenues keeps going up and they start getting closer to profitability instead of kind of screwing us over a little bit with the stock-based comp. But hey, we'll see what happens. Now, Qualcomm. Now, before I go into the gains, like, people who are, for anyone who just found my channel, what I've been trying to do as far as my portfolio direction is eventually I want to take all these stocks here and condense these so that the ETFs, so SCHD and VOO, they become the biggest positions in my portfolio. So I'm trying to become more conservative. And then on top of that, I will have about 5 or 6 individual stocks that I believe in very strongly, and that's how I'm going to roll. And the plan was that as these stocks, which are down massively, get into profitability, like huge profitability, I would end up selling them and putting the profits into one of the ETFs. Now, I mean, given the way how far down we are now and the way 2023 is looking with the Fed, that's not quite going to do anything to stop rate hikes this year. And yeah, I don't know if this is going to improve this year, so I may be waiting for a while. Qualcomm, however, I mean, it is inching its way back up. Now, it's still close to its 52-week low, but we're at a 40% gain. I consider Qualcomm being one of the next stocks I sell to fold into the ETFs, but, I mean, from a value standpoint, I mean, it's still considered undervalued. So we still have a ways to go, because I'm trying to consider value in all this. We still have a ways to go before I'm to the point where Qualcomm is, overvalued enough for me to consider selling. The same way, now, AT&T, before I get to there, AT&T and Verizon, they're looking really good now. Like, Verizon's low was $34. Like, it's inching its way back to up to only 18.8% loss. That's looking really good. Hopefully that continues. And AT&T, only 3% loss. Like, if this keeps up, I might actually be making money I mean, God, don't play with my emotions like that, AT&T. Don't do that. SHD, one of the ETFs, which will eventually become, well, it currently already is the dominant position in my portfolio, but hopefully I'm going to get it even bigger. I mean, right now I'm already sporting a 3% gain, which for a ETF, pretty good start. Tapestry. Now, this is a stock that I considered for a solid second or so because I'm starting to adapt the whole ideology of if it's good enough to screenshot, it's good enough to sell. So I'm looking at it as 183% gains, and I'm thinking maybe I should take profits. But if you look at Tapestry, so Tapestry is still crazy undervalued on a PG ratio basis. From a forward PE basis, like it's still got a ways to go before it's, I would consider, evenly valued or even overvalued. So yeah, it's a very tough situation. A very tough, situation. A very tough decision to make. I mean, I'm in so much gains, but I mean, Tapestry is still undervalued. Tesla, yeah, I probably should have sold Tesla back when I was anywhere in the greens. I mean, to be perfectly fair, like I wanted to wait until 2023 before I sold any stocks for tax reasons. And I kid you not, I know it sounds silly, but at the time, I thought I had a lot longer before Tesla went into the red, but it seems I was mistaken. So as far as Tesla, I know I talked about being interested in buying more Tesla once it hits like $100 or so, and that remains the case. However, like my priority is VOO and SHD. So we'll see what happens. If Tesla goes way below 100, we might scoop up some more shares, but we'll see how things go. Verizon, I already went over that. That's doing really well. VOO, the other ETF, which will hopefully down the road become the biggest position. We're not looking too bad either. So I took the proceeds from Revolve and put them into VOO, and we are just about break even. So a few more good days, and we'll be making some profits. And then, of course, we have Walgreens to close it out. It had earnings yesterday, which it did pretty well, but then the market really didn't like the whole, what was it, $5 billion opioid settlement, which put it in which put the net income into the red from a non-adjusted basis. Yeah, so they didn't like that, but today, I guess the stock market's a little kinder to Walgreens. There's a whole Walgreens reputation, which might weigh it down. It might be one of the stocks I sell, I rotate out once it becomes green. It might not. It's a decision I wrestle with. But anyways, take care, have a great day, and eat your vegetables.